Hello, everybody. This is Stan Audette, AAD Inspection Corp. I want you to know I'm doing this video for you. It's because I've been trying to fill out these SBA loan applications for the payroll protection plan. That's the PPP, or the EIDL, which is the emergency injury disaster loan. And boy, is that frustrating. And then I got to feeling how thankful I was that I don't really need them that much. Now, yeah, there's no funding available right now, even though I, like probably many of you, was one of the first to actually apply. But the reason I was thinking of you is last year, I actually obtained $200,000 worth of funding with 0% APR for 18 months. And that turns out to be actually probably better. Well, it's the next best thing to having free money. So I'm still going to try to get some of the money that would be forgiven through these other SBA programs, but I'm so glad I don't have to wait for it. So I'm going to have a funding expert joining us here in a couple of minutes that will help us understand more about that and hopefully answer a lot of your questions. And this is being posted on Facebook, so we'll be able to answer any of your questions as they come up, hopefully. So. And then if you look at the link below here on this Facebook post, you'll see a place where you can actually begin a process with Leo Canal and his funding group to get this done. So anyway, I'm going to see if Leo's ready to join us. And come to think of it too, I also wanted to add that the reason I wanted to personally introduce Leo Canal is because there are so many scams out there right now. Everybody, including me, realizes how important it is for people to be getting some funding to help their cash flow. So this personal introduction, I hope, will put you in touch with a way to get this done in a very safe way. So anyway, we'll get on with that in a moment. Okay, everybody, as you can see, Leo has joined us now. And hi, Leo. Leo, tell us a little bit about your background.
Sure, Stan. So I'm from a small town in southern Utah called Beaver, the oldest of 9 kids. Came to Salt Lake City to go to school at the University of Utah, studied finance there, got some different scholarships with leadership and business. And then I was sitting in this class, and this guy comes in, and he says, hey, your degree's not going to be worth much unless you have experience. And he said he was doing an internship teaching kids how to start painting businesses. So I said, great. So I did that, and I didn't know anything about painting, but I knocked doors in Park City, which is a pretty up-to-do area here in Utah. A lot of celebrities there, and I hired some painters. Luckily, I spoke Spanish. They were great at painting. I was terrible at it, but I was okay at the sales. That was when I first learned about business and entrepreneurship. And then since then, I started doing finance. A lot of real estate finance stuff, residential mortgages, and then eventually commercial. And I started to realize that business owners, especially newer and smaller ones, not the big businesses, but like the 80% of businesses that create most of the jobs, didn't have a lot of financing options. If you didn't have a lot of collateral, if you didn't have 2 years of really profitable tax returns, it was super difficult to get financing for your business. And so we started to see this trend, and we realized we could help a lot more people and have a bigger impact. And so the last decade, that's really what we focused on, is how can we help that small business owner, grow from nothing to $1 million to several $1 million a year in sales, build corporate credit, get credit lines, and also understand how to master their personal credit, because that plays a big part and success as a business owner.
Well, that's great. Thank you so much for that introduction. I just wanted the people to know who they were listening to and the fact that we already knew each other. But I've got some questions that come up, and I imagine these will be the questions that are in the minds of almost anybody who's watching this video. I felt quite frustrated trying to fill out the payroll payment program, that PPP, and then also the SBA's other loan, the EIDL. Are you seeing frustration in the industry also amongst small business people trying to get that application going?
Substantial frustration. And the first part of the frustration is a lot of business owners, banks and credit unions where their bank account is set up at, they didn't even get any of those paycheck protection loans processed because they, number one, didn't have the connection with the SBA, or number two, they didn't have the staff to put together the technology, because the SBA is still so old school. They had that paper form that you were supposed to fill out. And so if you didn't, bank with a big bank like Chase or someone like that who has the technology to take that application and put it online in the portal, then it was a very difficult process. And worse than that, several, partners and strategic partners I work with that are business owners went through, and they were some of the first to get submitted, and they didn't hear anything back from their bank until just recently, only to hear that, well, they're in the queue. So if there's more money, they're in the queue. But like, that money went so fast. And I think the majority of businesses that really need it probably didn't get access to it.
Absolutely. Hey, let's talk about fast. When I worked with you last, about a little over a year ago, I think it only took about 2 weeks to get way more than I'd even asked for. And you did it so smoothly. I hardly had to be involved. Yeah, there's a few things I had to do, but certainly not the endless SBA forms and the confusion and the stumbling around that I would have done that would have taken up a lot of time. So I want to ask you now, in this pandemic, about how much time do you suspect it might take to actually obtain some business lines of credit through the funding help that you provide? Is that something you can answer yet?
Absolutely, Stan. And right now, we haven't seen much of a drop-off. Maybe instead of taking 2 weeks, maybe it's 2.5 to 3, but still we have a lot of clients in just the last few weeks receiving millions of dollars in funding between all of them, and getting good approvals, and not having to jump through the hoops, right? Not having to get all of the business financials out and the assets, and wait for your CPA to put together the balance sheet and the profit and loss statement for 2020 and 2019. And so it's still a very seamless process. And more importantly, Stan, we just want to guarantee our clients one thing, that we're going to get them the very best financing that they qualify for and that exists on the marketplace. So we'll give them all of the options, and then of course tell them what's going to be quickest and easiest, and then they're in the driver's seat to decide what's best for them.
Okay. Now here's a question I've been dying to ask, and I bet it's on other people's minds. In your perception, what percentage of the clients that you receive into your group that have already been either turned away by or totally frustrated by conventional lending approaches?
Probably 60-70% are in that ballpark, or they knew somebody and so they were just referred directly to us and they got to skip that. But yeah, at least half go through that process. And in fact, Stan, we work with business bankers across the country at some of the biggest banks like Chase and Wells Fargo and US Bank and Bank of America. And the reason that they trust their clients with us is they know they're going to turn down more than half of them, and they feel bad, and they want to have a reputable place where they can hand those off and know that there's some creative alternative financing options available. And so they'll send those clients to us, and we'll put together all of the options for that client. And so it's a great question. At least half, probably closer to 60-70%, are in that boat where they've been turned down for conventional financing, but that's where we can help them with alternative and creative financing. And by the way, that doesn't mean more expensive. Oftentimes it's less expensive, right? We can get revolving credit at 0% interest. We can get no collateral loans with competitive interest rates. And so it can still be very affordable. We don't really prescribe to, if you've ever heard of a merchant cash advance loan, we don't really like those. Those are usually 6 to 12 month loans that are very expensive. That's not something that we generally offer. If it's the only option, we'll certainly present it, but we're looking for very affordable options for our clients.
Well, I'm glad to hear that. It sounds like you're certainly not in the predatory loan business.
No.
The next question I want to ask is, of those people that end up coming to you, whether it's from other disappointments or just going straight to you, would you dare share with us about what percentage of those people you're able to help with some sort of financing that they probably couldn't get elsewhere?
It's over 50%, and it actually can be higher than that, because let's say, for example, you went to your local bank and, well, your business is newer, doesn't have a lot of business financials, you don't have any collateral, and you recently had something happen to your personal credit, and you had some late payments and collections and whatnot. And so you're thinking, well, there really is no options available for you, but you probably have a partner, a spouse, a relative, somebody who believes in you and knows you're a good business owner and is willing to become a credit partner for you to get some funding in the name of your business, with them helping out with the credit part. And so in that regard, there's always a solution. And I haven't, probably a third of our clients will help that way, who maybe don't qualify for anything on the entire marketplace, but they have a friend or family member who can be a credit partner. So the answer is over 50% of those referrals come in qualify, and even more of them do, because they'll usually have a spouse or partner who has that good credit so that they can get some financing that way.
No, I like that a lot. But since you're also kind of a business credit advisor, then you're telling people the realities of that, the considerations. Should I do this? Should I do that? But I think more importantly, what I'm hearing here is you're going to show them all options that they probably might not be hearing through the more traditional lenders. And I think that's what people need to hear. And just because you're showing them the options doesn't mean they have to buy into any particular strategy, but at least they're going to be hearing all the strategies from you. So, a similar question really would be, what kind of credit scores or financial histories do businesses typically need before you can help them? I know that's a little redundant.
It's a great question. And so what you're looking for, what lenders like to see, is about a 650 personal credit score, a FICO score. And then if they've established that business credit, which really helps, they're looking for about an 80 PAYDEX score, which is the equivalent to about a 650, 680 personal FICO score. And so those are kind of the starting points. And the good news is, Stan, like sometimes a client might come to us and they've always paid their bills on time, but they just have a lot of maxed out credit cards and they might be right there close to that threshold. What we'll do is we'll get them a loan that didn't require any collateral with a 5-year term with no prepayment penalty. So we get them that loan, they pay those credit card balances down. Now those balances come down, and now they can qualify for some of that revolving credit at 0% interest and better financing options because their score just went up 40 or 50 points. And that's what we want to do. We want to empower and educate business owners so that they can dominate and kind of master their credit. And then at the same time, take the steps to do that and then improve their personal financial situation. And in that case, probably half of our clients will have some high balance credit cards that they're paying a big interest rate to. And so we'll show them how to move those expensive balances over to new 0% accounts and save thousands of dollars and improve their personal financial situation, as well as get the money for their business. Because we all know as a business owner, when our personal financial situation is strong, we certainly feel more confident as a business owner.
Thank you for sharing that. As you know from our history together, you've not only helped us get the business credit we wanted, but moving our finances in the picture of us over to business credit analysis rather than personal credit, and hopefully to be totally no longer dependent upon our personal credit ratings to do what we want in business. And as you've shared with me in the past, although there's a lot of businesses in the nation, very few of them actually make that transition, but you also shared with me how important that transition can be for businesses. Maybe we should take a moment talking about the benefits of not only getting business credit, but converting yourself over to business credit evaluations as opposed to personal.
It's a great point, Stan. One of the problems that new business owners have, like I said, is they'll max out kind of their personal credit for their business because they don't know any better, right? And so the sooner that you can have that business entity, whether it's an LLC or an S corporation or whatever it might be, and the sooner you can start building that corporate credit, the sooner the business can qualify for financing on its own. And what's important about that is, well, instead of holding those balances on your personal credit, which is going to weigh it down, it's going to affect your debt to income ratio when you're trying to buy things like a house, a car, or whatever you need personally. When you can get it in the name of the business, it doesn't report to your personal credit, and it starts to build that business credit score up. And now your business is standing on its own 2 feet, and it's shouldering the load like it should, and you're putting a lot of that risk and a lot of that liability in the name of the business instead of on your personal side. And that really frees up your personal credit. It strengthens it, at the same time building your business credit. And business credit is different than personal credit, right? If I go out and I get a car loan, well, the next month that payment history is going to show up on my personal credit, 99.9% of the time. But if I go out and I get a line of credit at XYZ supplier down the street for my business, there's a good chance it's not going to report to my business credit score. And that's why you have to know the right creditors and vendors and setup process to actually build that business credit score. And so that's part of what we do, is not only get clients the best financing they can qualify for now, but then also build that bridge to where eventually they can have it all in the name of the business and start to build that business credit score. And you just have to know the right process to build that profile with the 3 business credit bureaus. And then once it's built, go to the right creditors that will actually report that payment history, to your business credit.
Yes, I wanted so much for our viewers to hear that. The way I interpret that is what really motivated me to share this video with the people I know is because I know they're in the similar pinch as we are right now, just really paying attention to where can I get operational cash flow in these pandemic times. But I wanted them to also hear that you are quite the coach in understanding how to convert personal to credit to business credit, and how to actually run businesses financially much more efficiently. You're the coach in that. And you've actually written a book on that. And I know you're not trying to sell the book on this video, but would you talk about that? Because that has a lot to do with, I think, the credibility of how you can help.
You bet, Stan. I appreciate you sharing that. Here's the book right here, The Business Funding Formula. It's available on Amazon, and I think you can get it for free if you are a member of Kindle Unlimited. But what the Business Funding Formula was, I was searching on Amazon, trying to get anything I could about our industry and financing options and what it takes for an entrepreneur to get financing outside of venture capital. The reason I was looking at that is because less than 3% of businesses get venture capital, and less than 10% of new businesses get any type of financing from SBA or the banks. So we're talking about 90% of new businesses and most small businesses, like, there's no options for them. And so what I wanted to do was I wanted to write a book that would kind of spell out that process. Like, if you're in that 90% and you have a small business and we're saying you're not doing $5 million a year in revenue and you're under that, or you're new, well, how do you get financing? What are the options? How do you build your personal credit up? How do you build your business credit up? And so that's what the Business Funding Formula was. Well, actually, there is a formula. And actually, going back decades ago, guys like Sam Walton, who built Walmart, guys like Kevin Plank, who built Under Armour, and Phil Knight of Nike, they all understood this process, and they would build these relationships and strategically understand with different lenders what it took to qualify. And we're talking about debt financing, right? We're not talking about going to a venture capital firm who only will give money to 2% of businesses. We're talking about understanding the right relationships and creditors and what it takes to qualify for financing for them. And it really is a formula that anybody can follow. And then once you understand what you can qualify for, well, then the next thing is, does it make sense? Just because I qualify for money doesn't necessarily mean I should take it out, right? And so then it comes down to a formula that we've got in the book that's called return on loan or return on line of credit. We all know what ROI is, right? Return on investment. We invest in a stock. We hope we generate a profit out of it over a year or two, or however long we hold on to it. Well, the same thing happens with the loan or line of credit. If I take out a $100,000 loan, why sure as heck better be able to double that into $200,000-$300,000 of sales for the next year to be able to justify the expense associated with taking on that loan. And so once you know what your numbers are and you have proof of concept as a business owner, well, now you know it makes sense. Well, if I take this loan, even if it costs me 20% interest, if I know I'm making 150% return on the money and netting a profit, then I'm winning and it makes sense to take it. But if the numbers don't add up, then maybe it doesn't make sense to take it.
I sure hope that everybody listening to this can get a sense of what a coach you are. Me as a small business owner and a lot of my friends, we're so gosh darn busy just trying to figure out how to run our businesses day by day. We don't have time to learn all this other stuff. And if we do part of it, we might just be dangerous. And I'm pretty much guessing that if we tried to follow some of this path ourselves, we'd probably fumble through it and miss a lot of opportunities, and maybe even make it more difficult to go forward if we were blundering along the path. But I do want to get on another subject that's kind of back to why we're doing this video. I know I'm still going to be looking for some of that free money that could be forgiven on both of those SBA programs. I mean, why not? I mean, isn't that even better than 0% interest? So one of the questions I know that people are probably going to have out there is, how would that, if you're able to get, say, some large sums or substantial sums of of business credit lines, would that in any way have an adverse effect on applications that they may have in process or put in process for the SBA loans?
Great question. So if it's the economic disaster loan, there's no impact there because you just go online and fill that out at SBA.gov. If you haven't done that, you should. Will the money come? We don't know, but it's definitely worth getting that application submitted. And I think they max out at $10,000, and it's kind of a grant type loan. And then the Paycheck Protection Program, of course, is based on those basically your 2019 payroll. The average month times 2.5 is going to be your loan amount with that. And as long as you use 80% of that money towards payroll after you get it 8 weeks after, and the other 20% you can use for utilities or rent, then that entire loan is forgiven. It is free money. Absolutely. You want to make sure you have that submitted. Now, right now, the government is very likely to approve another package of $350 billion for that PPP program. So you want to make sure you've got everything submitted, probably with 2 banks. Now, there's this thought that if you have it with one bank, then it might get jammed up in the system. But from what I've seen a lot of people who have submitted with 2 or 3 banks or credit unions because one of them actually gets it through a lot quicker. And once it's funded, then you can take the other applications out. But it helps to have multiple opportunities to get it. The good news about it is other than your payroll, they're not pulling your credit. You're not doing an SBA guarantee. And so there really is nothing that can keep you from getting that loan except the government running out of money, which already happened in the first tranche. And the second thing is your bank or credit union just doesn't have the processing capability to get it through, which is why I recommend going to multiple banks or local credit unions and seeing if you can get in the queue, because I'm sure this second tranche, I wouldn't be surprised if they approve this by the end of the week. I bet it's gone 2 or 3 weeks later, just like the first one. So get in there. But in terms of the additional creative and alternative financing we do, like all of the financing options there that you can go after at the same time, it will have no negative impact or effect with your Paycheck Protection loan, because the Paycheck Protection loan, they're not looking at anything, right? They're looking at your payroll documents for 2019, or if you're brand new and you ran payroll the first quarter of 2020, then they'll look at that. But yeah, no negative impact. And the bottom line is, Stan, a lot of business owners are going to be in that situation where they get that loan and they use it for payroll the next 8 weeks. And then now what, right? When they reopen this economy as they're doing, it's not going to be instantaneous. It's going to be gradual, and it's going to take people time to go out and be comfortable and resume their consuming, their spending, and even get their jobs. So 20 million people, I think, have lost jobs so far. And so it's going to be a process. And so, Stan, it's super important that every business owner has access to as much revolving credit as possible. What's great about revolving credit? You're not paying on it until you actually need it and use it. But boy, if you wait too long till you really need it, you might not qualify, which is why it's important to get access to as much revolving credit as now. And then you want to conserve cash, right? And so if you're conserving cash, you want to talk with creditors and vendors and explain the situation. As long as you'll communicate well with people, everyone's trying to help everybody out, and they won't damage your credit as long as you explain, hey, I might need to skip 1 month's of payment or 2 months of payment. But I'm going to be right back on it, and I've got a plan to get sales going again and get our staff back going. So now's the time to communicate, because if you don't, that's when your personal credit takes a hit. That's when your business credit takes a hit, because you just go in reverse. And I've seen this before in the first recession back in 08 and 09 with the financing, and people just stopped. They froze and went reverse. Don't do that. Keep moving forward. Keep focusing on sales. Get access to capital. Get access to money. And then make sure you communicate with creditors if you can't make payment and need to skip a payment, because they're being very lenient and doing that without hurting your credit right now.
Leo, you're giving us a lot of free coaching right now that's worth a lot of money. People would dearly pay you for this type of coaching, and here you're sharing that with everybody that I know for free, and I sure appreciate that. I know one of the questions I had when I was so surprised that you got us so much credit for 0% APR for up to 18 months. And I know one of the first questions I had is, how can they do that? You know, what motivates them to do that? And I know there's people out there with those naive questions that I have. Would you address that for a moment?
It's a great question, and the idea behind it is they know their numbers. They know enough people will take it out, and after that 0% period, still have a balance. And so after that 0% period, because it's no collateral funding, right? You didn't have to put your home up or equipment or anything. It was just unsecured, and so those unsecured rates then are going to be 9 to 19% after the 0% period. And so what we'll do is we'll put together a second round of 0% funding applications where you can actually move it from whatever it ends up being after the 0% back to 0% for another year. And you can strategically do that. And in fact, we help some business owners eliminate their personal credit card debt at 0% interest over 3 years, doing just that exact type of strategy. But they know their numbers. They know that a lot of people will go through that 0% period and then they'll just hold on to it and eventually pay it off and pay some interest, and that they'll make some money doing that. So that's why they do it. They know their numbers. And the good thing is they're still lending, right? And even back in 08 and 09 when I was first starting this, lenders were still lending back then, and they were in much worse shape back then than they are right now. Right now, they're much better capitalized. They didn't give out subprime mortgages to people that couldn't afford them, so they're in a much better spot. But still, we don't know what the future holds, right? So it's very important to get access to as much money right now so that if you do need it down the road, you have it. The worst thing you can say is, I'm good, I don't need any. And then 3-4 months later, wow, I really need it, and now I don't qualify. I can't tell you how many times I've seen a business owner do that who qualifies for 100,000. He's like, I'm just going to take 20. They come back 6 months later, I really need some money. Things didn't go the way I thought they were going to, and they no longer qualify, and they're in a tight position. And so that's not where you want to be.
I find myself so wishing right now that for all the friends that I know and care about, that I would have probably done this video and sent out some emails, almost a month ago, but it didn't occur to me until I was totally frustrated that other people might like to have some of the coaching you're offering. I'm assuming that many of the people watching this right now are going to be just excited for more information, which they can get from you. And I do want to point out that while they're watching this on Facebook, and that's probably where most people see it, if not YouTube later, there's a link below where they can get in touch with you and start that process. And I will tell you that once we started that process with you a year ago, I didn't have to fill out endless forms. You kept us engaged. Your team was just spot on, actually exceeding the promises that you made to us. You're for real. And I just wanted everybody to know that, because I know there's so many gosh darn scams out there right now. It just makes everybody really, really leery. So I hope this is a way for a lot of people to kind of save their tails, save their bacon in this economy, and at least at the very least to feel a whole lot more comfortable before it's too late, as you said. So I think I'm just about out of questions here. Let me look really quick.
Well, let me just say this, Stan. Like you said, Stan has a special link just for everybody who's going to be watching this video and learning everything. And with that link, you're going to get discounts. We're going to waive all upfront fees. There's no underwriting or application fees. We can get a snapshot of your credit profile. It's a soft pull, so there's no adverse effect. And you can find out for free what your pre-approval looks like by using Stan's special link at the bottom of this video. So you have nothing to lose, right? If you're like, there's no way I'm going to qualify, well, great. Apply anyway, and we'll tell you what you need to do to qualify, or we'll tell you about the credit partner program and how you can find someone that way, or we'll talk to you about managing your business bank statements. There's always a solution, and it's important to empower and educate yourself, and that's what we're going to do. So just fill out that link below, and you can find out for free what your pre-approval looks like and all the options that we're going to be able to bring you.
You know, Leo, I just had one other thing I wanted to remember that you taught me, is that most of the time in our business, we had the habit of simply paying our bills right out of our debit account, right out of our checking account. And now with these credit accounts, with the revolving credit, we've learned to go ahead and put everything on the credit that we possibly can. And then, yes, go ahead and pay it off that month before you have any other payments due, or before we have any interest due, if there was interest being charged. But by doing that, most of these people are giving us wonderful cashbacks rewards. And some of them give us not only rewards for putting on the credit, but rewards for paying it. That's just amazing. So I know you've you've had other people too that have actually funded other important aspects or systems in their businesses just with the cashbacks. So it's not free money, but why not take advantage of some of these things, but do it in a purposeful way? And that's where I love your coaching. It's a common sense approach. And that's why I wanted people to meet you on the video, just to see who I've been dealing with and maybe put a little bit more hope back in their lives. You know, Leo, I know you've got another appointment you have to get to, so thank you so much for joining us, unless there's something else that you wanted to talk about briefly before you sign off.
You know, it's been my pleasure to share some information that hopefully can, make you more comfortable. And just, I just, when you're going through these situations, you want to focus on getting access to as much cash as possible, as much credit, having it there as a business owner, as an entrepreneur. And then you need to focus on sales, right? Control what you can control. You don't want to worry about everything that you can't control with the pandemic and the economic slowdown, but what can you do differently? For example, I seen an auto dealer, and obviously people aren't flocking to his auto dealership to buy cars, but what he has been doing is online test drives with Zoom and just making this pivot to bring things to people who are sitting at home anyway. And his sales have only dropped 25%, whereas most auto dealers' sales have dropped 75%. So what can you do to pivot and do something unique to be able to serve your client or your customer that your competition isn't willing to do? And when you have access to money to be able to make those things happen, that's advantageous. And the other thing is advertising is pretty cheap right now, right? Supply and demand right now, there's low demand and a lot of supply. So there's opportunities. And some of the biggest, most successful companies will come out of a recession and take more market share because instead of going in reverse, they move forward. And the parable that people talk about is you have a wartime business leader and a peacetime, and we're in a wartime now. So now it's actually time to be smart. It's time to be aggressive, and we are at war, but you can win by, taking that action.
Leo, thank you so much. My friends, I feel I've put you in touch not only with a funding coach, but a true business coach. So pay attention to what he's saying, form a relationship with him, and I'm sure you're glad that you did the same as I have. So we're going to be signing off for now, and be sure to click the link below to keep this rolling. And oh, by the way, you can call me if you like. You've got my contact information if you want to know more from my side. This is why I'm referring you to Leo. So you guys take care, have the best, and don't forget to be thankful.